Hey everyone, in this video I'm going to bring you one growth stock that's down 72% off the high that I think you can buy now and for the rest of 2024. I think this stock is cheap. There are reasons why it's cheap, which I'm going to go through in this video, but I think the risk versus reward is worthwhile for this ridiculously cheap growth stock. So let's get into this video. Let's see what the growth stock is and why I think it's a good value despite these headwinds.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, so the growth stock that I'm talking about, that I'm recommending in this video, is Alibaba. Alibaba is down 72% off the high, and I think it's an excellent value right now for investors looking at a good risk versus reward for a stock that's not expensive. Still, there are reasons why the stock is cheap, so let's go through some of those characteristics of Alibaba Group. Of course, longer term, the company has demonstrated phenomenal revenue growth, but you could see since 2022, growth has stagnated, right? Relatively flat since 2022, 131 billion in revenue. That has not increased much since 2022. That's one of the reasons why investors are less optimistic on Alibaba stock in recent months. Another reason is a falling cash flow from operations to sales margin. You could see around 2016, 2018, the company was turning roughly 60% of sales into cash flow from operations. That metric has nearly fallen by 2/3, down to 21.09% in the most recent trailing 12-month period. Although that is improved from the bottom of around 16-17% it hit about a year and a half, 2 years ago. It is getting better. Still, it's 1/3 of where it used to be, and the company is just not as robust as it was back in 2016, 2018. But at the same time, the stock price, the valuation, is a lot better than it was in 2016, 2018. You were not able to buy Alibaba Group stock in 2016, 2017, 2018. At the valuations, you're able to buy Alibaba stock today. The business was in much better shape back then, and the valuation reflected that. And a similar story with its operating profit margin, which is down from the roughly 46% 10 years ago, and now down to about 13.37%. Again, it is improving from the bottom reached about 2 years ago. And therein lies one of the reasons why I think now is a good time for purchasing Alibaba stock. The worst seems to be behind it. You can see all those decreases, right? Cash flow from operations to sales seems to have bottomed. And you can see a nice little upward trend here, although it's not spectacular, but it is upward, and you've seen the bottom, so that's good news there. Similar story with the operating profit margin. You see the bottom here in 2022, and it's moving upward nicely since then. Still, the company is not doing great. In the latest quarter, revenue increased by just 5%. Income from operations decreased by 36%, although that was primarily due to an impairment of intangible assets. Additionally, net cash provided by operations decreased by 26% compared to the same quarter in 2022. So even the latest quarterly results were not that great compared to the same quarter in 2022. However, one thing I did like about the latest quarterly update, which Alibaba gave investors on February 7th, was that the board of directors approved an increase of 25 billion in the share repurchase program, demonstrating their confidence in the outlook of the business and cash flow. I like to see management teams buying back their stock, especially when their stock is depressed in valuation. That demonstrates to me that they feel their stock is undervalued, and they're willing to put billions of dollars behind that feeling, which convinces me that they believe that. If they were just to go out and talk about how they feel their shares are undervalued, that wouldn't be as convincing. But putting another $25 billion behind it is really convincing. $25 billion purchase is a convincing decision from a management team. That makes it likely that the stock price has a little bit of a floor underneath it, because if it were to fall, management could come in and purchase billions in stock. Therefore, the stock price is not as likely to fall by as much, because there's a buyer in there that already at the valuations on February 7 believed it was undervalued. If it falls below where it was in February 7, imagine how much more management would believe it's undervalued. So it's not everything, but it is something, and that something is big with $25 billion in repurchases coming. Another thing to highlight is its prospects over the next, I want to say 2.5 years are respectable. They're not horrible. They certainly don't reflect a stock that's a company that's in major trouble, right? Revenue in the fiscal year that ends on March 2024 for Alibaba is expected to be 8.2%, with fiscal year 2024, which ends on March 2025, expected to be 7.9%, and then fiscal year 2025, which is ending on March 26, another 7.7% growth in revenue. And then earnings per share expected to increase by 15% in the current fiscal year, 0.7% in the next fiscal year, and then 13.2% in the following fiscal year. So these aren't terrible numbers. They're not great, but they're not terrible. Certainly, these wouldn't be numbers that I would be willing to pay a premium valuation for. These aren't those types of numbers. But these are also not the type of numbers that I would expect in a stock that's trading at a valuation of less than 10. Alibaba stock is trading at a forward price to earnings of just 8.147. This is the type of valuation you see in companies like Verizon, AT&T, Ford, and others like that, with very high levels of debt, over 100 billion in debt, all of those companies I mentioned, and very low single-digit growth rates with single-digit earnings per share, even declining earnings per share in some cases expected for those companies. That's not the case with Alibaba. You've got, high single-digit revenue growth expected over the next 2 to 3 years, and you've got earnings per share in the double digits for 2 out of the 3 years. So I'm in no way saying that this is a company that's doing excellent or doing really, really well. I'm just saying that the valuation compared to where it is, the sell-off seems to be overdone. I agree that the stock price should be lower because the longer term prospects in terms of cash flow from operations to sales and operating profit margin are down significantly from the heights. But at the same time, they have appeared to be bottomed and moving upward in both regards. And looking forward, it does look like it's growing revenue almost double digits over the next 2.5 years. So all things being considered, I think at a forward price to earnings of 8.147, I think Alibaba Group is a good value for investors looking at a cheap growth stock to add to their portfolio. Before I let you go, let me tell you about the greatest deal on YouTube. With just a click of a button, you can get free financial analysis from a professor with decades of investing experience. So what are you waiting for? Hit that subscribe button, and I'll see you again soon.